And joining me on the podcast and in full Technicolor, you only get the full glory of Paul Hill, I think, on video. He's a big smiler, equity analyst, full-time investor. You all right, fella?
Yeah, good morning, Justin. It's been a busy last 2 weeks, hasn't it? That's for sure. Crikey, so much news flow. I mean, whether it's basically vaccination programs, people getting lockdowns, Boris, saying people shouldn't go on holiday to amber green, to amber territories. So, packed jam.
Yeah. Packed jam. Wow. It's so jam-packed you can't get further. But wait, listen, what do I notice this week, right? Halfway through the week, I noticed that the Indian variant news was slipping down the news agenda. And I thought very quietly, what's going on here? Because at the start of the week, this was going to write off everything. The vaccination program has gone to hell. Don't worry about that. The Indian variant is going to trash everything. Any bit of work's ever done. Indian variants here. And all of a sudden, it got very quiet about Wednesday. So I looked on the BBC site and website, and there was evidence there that the transmissibility of this has been over-egged, pretty much. They said it's 50% more transmittable. Now they're saying it's not. And there's a 50% chance of that happening. Now the PhD looked at the data and said it's a lot less than 50. Now it turns out, AstraZeneca will protect you against it. And this is a case of lots of variants. We get this fear-mongering, which is not a bad thing. To a certain extent, it has to remind people, right now, we're still not out of the woods, There's a long way to go, but we're partially the way there. But you have to be careful. And in fact, that, along with the weather, I think, but I've seen some spending figures coming out saying in Wales, retail is booming. But I think it's almost like a slow opening of the economy due to the weather and due to the scariness or the scariant of the Indian variant. I think I don't think yet retail is full up and blooming. It's almost like people can't be bothered to go out because the weather's dreadful and the Indian variant is around. So I don't know what your feelings like, but it doesn't feel like the economy's open yet. I haven't changed my behaviour in a week. Have you?
I sort of have a number of takeaways really from the Indian variant. One, it's been a massive wake-up call for the country and even for the world as much as anything, because obviously, India is one of the world's, and is by far and away the world's biggest vaccine maker, and it's still got obviously all these problems. But for the UK and developed markets, what I think is for an investor's perspective, which is to take away as important, is that even though you might say to people, when you return from the amber and red locations, you've got to self-isolate or quarantine, frankly, that did not happen. When a whole bunch of guys came back from India and then didn't self-isolate, it's carried on working, socialising with their family, and hence we had outbreaks across the country, Bolton in particular. And obviously we've got quite high, vaccination rate. So that's one takeaway. And I think what the important then next step is that the government aren't going to make that same mistake next time. They're not going to allow people to go abroad and say you can do, unless you've got real, proper reasons. So the holidays, etc., abroad. But if you've got really essential circumstances, you can. But they're not going to allow people to do that. And then they're just, and that means then we're going to have sort of like a boost on, obviously, more on staycations. But obviously, it's going to wreck those international airlines that rely on that kind of travel, the likes of British Airways, Lufthansa. The low cost will probably be a bit better because I think there's doing quite a lot of, sort of like point-to-point stuff to Portugal. But that's one sort of takeaway. And then the next takeaway is when it comes to sort of like opening up the economy, yes, sort of the weather's sort of meant that, a lot of restaurants and coffee shops and stuff have been, sort of like, impacted to a certain extent. But I can tell you there's still massive pent-up demand. How many people
definitely.
How many people I've seen sitting outside of a coffee shop when it's raining is just enormous. And that just shows you that people want to get out there. So I've got a sneaky suspicion we're going to see a rip-roaring UK domestic economy this second half, largely actually almost triggered by things like the Indian variant, because it's scared people that actually, or scared the government, and they're just not going to allow people to willy-nilly go off internationally until the world has been properly, vaccinated. Because why risk the UK's economy, people's livelihoods, people's health, and all the work and money that's been pumped in? Do you know? Did you just read that? How much money the government has put into the economy just to support COVID so far? It's a small figure of £370 billion. They're not going to jeopardise that and allowing a few people to rock off to, places like Mexico and all these other places, India and Southeast
But
Asia.
do you know what the funny thing is, though? And I know the press are largely a bit scared to talk about this, but if you look at it, I mean, even ironically, even though most of the vaccines in the world are produced in India, their vaccine rate is still below 10%, and I know it's still a big number, but it's still below 10%. It's very transmittable. And then you've got a cultural link to, they've said in Bolton as well, very low compared to the national average. They're saying around 30% of people are vaccinated in Bolton. And of course, we're now over 53% of the entire country. So it's way below national standards. And there's people distrusting of the vaccine in certain cultural sections of society. And that, played into that spread really, and people coming over from India. So, yeah, I just think, it's almost like educating people on the vaccine. You've got to have it. Listen, the sooner you have it, because all this scares and it's social media and all that stuff. It's flaring up. But it's very interesting. But I think that it's going to take longer, like you said. We'll always have this, variants popping up left, right, and centre, but as long as sort of protected to a certain extent. But again, there's different. We've said this before. Domestic economy is going to do well because we are far ahead of most countries on vaccinations of programs, and so we don't want to import the virus, unnecessarily.
I think the point is we're always going to get the variants because you'll get to you somehow, even through essential travel. The point is when you fully open up the borders, you're just opening the door and just saying, come on, and we'll get lots of it. Whereas what it happens when you effectively have this semi-hard border where you don't allow people to go on leisure and holidays overseas to dangerous areas. When you do that, it gives yourself time to prepare and to tweak the vaccines such that you only get a small number of people bringing the variant in, and that's the important bit. And what it also means, to a certain extent, is we're going to continue to see lots of surge testing. We're still going to continue to see sort of surge vaccinations and surge, re-jabbing in September and October for those people who need, protection against the new variants. And that's going to. And another thing which is, sort of perfectly, the UK is now the leader in genomic sequencing of COVID. It's sequencing just about every single positive test in the country, and that's just playing to the book of people like Source Bio, because they do PCR testing, they do genomic sequencing. The actual backlog and the patient wait listing is getting bigger by the day. And not surprisingly, they announced, because they were one of the leaders in this, they announced last week that I think it was on Wednesday, I think, that they're part of that framework contract from the government, from the DHS. There's 15 billion. I mean, just think about it, 15 billion pounds just for one part of that, lot 4. In total, I think it's about 22 billion. And, that the government sees surge testing, PCR testing, and lateral flow testing is going to continue for a long time, because until the world has finally rid itself of COVID, you're always going to get this transmissibility problem, and you're also going to, the variants are going to affect the efficacy of the vaccine. So we either need.
Did you see that study this week, though? It made me laugh. Apparently, dogs are better at picking up COVID than lateral flow tests. And so you just have a lot of dogs at the airport. It's fine. We have those anyway. Drug testing. But by the way, I did do a survey on Monday. Of course, the economy opened up. I did a survey on Twitter saying, will you be going to a bar, restaurant, cinema, or doing something related to leisure or hospitality this week? Started off with the majority of no, people saying no. And then the yes overtook it, 928 votes. And it's like a Brexit vote. It was for a long time. But it was 53.4% said yes, 46.6% said no. So, but I'm not sure people understood that was a week. But I'm sure some people. Are you going out this week somewhere? Are you going to a pub or a restaurant?
I don't go out, mate. But my family did last night. Yeah, they were out. They were out partying for the first time.
That's true. I just thought this week, my life hasn't changed at all. In fact, it didn't change. It hasn't changed anyway. Whatever. So even if we're in lock, it's pretty much the same. I come to the office and do my stuff. So yeah.
But I would say, just finish off that Source Bio thing. I would add, is that the actual share prices, a lot of these testers are now looking in real value trade. I mean, I was just looking at the Source Bio shares, and I think they're about the same price as when they listed back in sort of November, about 160. Or about 160. And what that means is that they've got this base business which does obviously all the laboratory testing and stuff. And I think that's worth roughly, sort of around about £2, £2.10 just on its own. And then you've got effectively the COVID infectious disease testing, which I think is frankly going to continue. And if you just model that and just say, okay, we're going to see sort of 25% of, current year's expectations going forward for sort of like levels of, sort of from 2023, about 20 to 30% of where we are for 2021. If you assume that sort of like, this will be over £4 it's worth. So, I mean, I can understand why super smart sort of life science investors, Chris Mills, have been adding to their position, because he can't add much more because he's got over 20, he's got 29%. But it just
this
shows
is where deep research comes in, because I think some people are maybe lumping Source Bio in with just a testing company that has. And maybe people are worried about if testing's going to taper off a little bit, they may suffer. But like you say, no, they've got several arms to the business.
Genomic sequencing, sequencing for them is absolutely flying, no doubt about it. The PCR testing is flying because obviously there's so much surge testing going on, and then this whole screening of cancer and other conditions, biopsies and stuff. We're just pushing that to the right. It's got to happen, and that'll be. And the government's already said that the budget's not going to be a problem now. Another thing, here's a question for you, Justin. Over the last 12 months, when you've been in lockdown, how have you celebrated in terms of birthdays and big, anything which is?
Oh, I know.
Have you got yourself a big celebration cake at all?
Do you know what? I was just thinking earlier on. I thought if this company paid the dividend in cakes, I think they'd get a lot more shareholders. Because and I had, I think maybe a colleague, but a guy from equity investment there. He talked about Cake Box a while back. And I was quite surprised how well they're doing then, actually. And I thought, wow, they obviously they've been affected a little bit, but they haven't been. It's not like the economy's been shut down with them, is it? Really?
Well, when you say affected, I mean, this is the thing, you see, because people don't scrimp and scrape when it comes to birthdays during lockdowns. Yeah. And for a business that it's a 100% franchise, it's got about 157 stores around the country, I think, which are franchised.
By the way, this is Cake Box Holdings. It's CBOX.
Yeah, sorry, it's Cake Box. Yeah, we're talking of which makes basically luxury egg-free celebration cakes. And what we're thinking here is birthday, wedding cakes, and then lots of sort of like bits and pieces where people want to treat themselves on a regular basis, like slices and stuff like that. And it's got a franchise store base of roughly around 157, stores, etc. Now, what's really interesting is that during the lockdown, most retail stores have really struggled. Yeah, they had like-for-like sales for the last 40 weeks, up over 14% in the store. And that says a number of things to me. Is one, this is a luxury, affordable sort of like, treat that people want, and therefore they're doing it. Their online is absolutely just going through the moon. It is now about 25% of their total sales. And also, the entrepreneurial side of those franchisees is really coming to the fore, because they are absolutely sort of knocking the ball out of the park in terms of, getting the product. And it's been a real game changer. It's shone a spotlight on the company, this pandemic, that, basically has accelerated that whole brand. And going forward, the runway is still massive, because they're still very much underrepresented across the country, certainly in the Northwest and in Scotland, and even really in the sort of the Southwest. And the franchisees make a lot of money out of it. It's got pricing power, and therefore the margins are very good. And I, as a consumer, you look at it and you're sort of like, well, I don't mind paying 50 quid for a lovely cake, which I can guarantee time and again, it's fresh, it's delicious, and it's free from. I mean, if you think about it, I've got, just as an example, I've got my father, he couldn't have his 80th birthday in December when he was actually, so we've delayed it to family do. It's basically down in Reading, not Newbury. I got it wrong when I was interviewing the two guys, the CEO and the CFO. It's down in Reading for August, and there's about sort of like, they want about 30, 40 slices done, etc. But I absolutely want to guarantee the quality, the freshness, how delicious it is. And some of the guests are, sort of vegetarian. Some of them, they don't want actual egg, and other ones are, not bothered at all. And so when you have a party of a large number, then you've obviously want something which everyone can eat, and therefore, this makes it absolutely perfect. And I don't mind, as long as I can guarantee the quality. And they say the runway ahead, they're going to do, I think just south of £22 million. Well, that's what they did last year in a COVID-affected year. But I asked the CEO, Sukh Chamdal, and the CFO, Pardit Das, on an interview about 2 weeks ago, how big this business could get to. And they'll be able to do around about 20-25% EBIT margins, which is because it's a franchise model. And that's still less than McDonald's, which is a franchise model, which does over 40%. So there's a lot of runway on that profitability side as they obviously scale up and expand. But I asked them how big that business could get to, given that they're just south of 22. Well, you know, Pardit Das, the CFO, reckoned he could do over 50 million 5 years' time. And I just ran the numbers on sort of 38 mil at sort of 25% EBIT margins. And I was getting a share price of £4.75 compared to the current one of roughly around about.
Yeah, that's not baked in, Paul, is it?
Very nice. And
I just realised, you talk about birthdays, you're right there. I just realised birthdays, right? I just 66 million people in the country, divide that by 365, and you got 180,000 people celebrating birthdays every day. That's exactly a market, you know. It
is. It's a big, and it's underserved because what you do to get a free from delicious fresh cake. You can't. You can hardly get them. You have to rock off to get an M&S and get a sort of Colin the Caterpillar, or get a dodgy, jam cream sponge down your local deli. And frankly, you can't rely on the consistency and the product quality, which is really what you want. If you're treating your family, you're more concerned about what your guests like, if they like it, rather than actually yourself. But if you run the numbers using Pardip's and use 50 million instead of my more conservative 38, you get a share price of, I was just running it, you get a share price of over £6. So you've got double-digit sort of capital gains. I mean, the shares the stock has already done really well. It only listed about 3 years ago and has already gone up from, I think it was listing price was 108 to 260, 270 now, which is over 35% per annum return, plus you get a nice dividend. So, I would say to investors, have a good look at this. And if you want to do a bit of lovely due diligence, go and test the product before you buy the shares. Certainly keep the tires on it and enjoy it.
Yeah, I just did a search there on Google about Cake Box, and the first link that comes up, actually, the domain is eggfreecake.co.uk, which is them. That's their thing.
That's it. That's it.
That's very clever. That's very clever, like you said, because you don't want to. If you want to get a cake and someone's a vegan, or in fact, one of my son's friends came around on this week, and he's allergic to eggs, and so we have to check everything, all the packaging.
Exactly.
Now, you can't just order from Asda, Sainsbury's, or whatever you're going to get, Tesco, because you have to look on the ingredients and all that stuff and see what it is. If they're all egg free, it's a no brainer, isn't it? So it's a very and that the market, especially, is growing massively. I don't know if you saw Oatly, for example, the same kind of thing, but free from dairy, and it's good for the climate and planet. It went bananas yesterday. Their share price now valued at 13 billion for a dairy-free milk. So that kind of specialist area, it's only going to grow. In fact, a while back, I invested in Agronomics, which is an investment company. Jim Mellon and the guy with Instant Smoothies, now the chairman. But I got bored with it. But I said, this is the way forward. If you can eat meat that tastes like meat, that's as good as meat, cultured meat and all that stuff, and you don't know the difference, but there's no animal killing, there's no less, tiny impact on the environment, and and all that stuff. Why wouldn't you do it? It tastes good, and if the price is the same, why wouldn't you do it? And so I invested that for a while. Got bored. Got out 3 months later. It went mad. It went up
that seems to be a trait with your investments. Got bored.
The share price went mad, and they just raised 65 million. And that was a sub sort of 10 or 20 million market cap. They're now worth about 200 million. They just raised 65 million. And so that area, that specialist, free from stuff is very powerful, very big, I think.
Well, you raise a really good point, because at the moment, you say that they're egg free, and they do some vegans into the cookies, but they're very close to be doing a sort of like a supercharged vegan celebration cake with all the cream and the sponge and stuff like that. They've managed to get the sponge. Now, this is something which is really important. That I'd advise people to have a look at that video, because you get it. It just comes through perfectly. The CEO, Sukh Chamdal, and the CFO, Pardit Das, founded this business back in 2008, 2000. They are still massively passionate about the product quality, about the actual, consistency of it. And so with this vegan product, they're going on to 6th or 7th reiterations. and they're just about to get it. So when they launch this vegan, sort of like celebration cake, it's going to be far and away the best in class, because frankly, it's not easy to make something which tastes delicious and fresh. It's particularly a vegan cream. You just can't even buy it in the shops and stuff like that. So these guys are just into the detail. They're passionate about it. They live and breathe it, and you can just feel the energy when you speak to these guys. And what that means is that when the product does hit the tape, it's going to be first class and significant step change on what's available, in the market at the moment. And the reason why that vegan product is so important. Just remember, cast your mind back to the headlines 2 or 3 years ago when Greg's launched its vegan sausage roll. It was enormous, and it absolutely jumpstarts even their store estate, and they're rolling out even more vegan. So I actually think this could be a game changer for them.
Yeah, absolutely. I just think, and I think it's literally, if it's on quality, the comparison is exactly the same. If the quality is exactly the same, and the price point is wrong, in fact, people are prepared to pay a little premium if you avoid it. If you're avoiding sort of anything that this, and let's be honest, agriculture is a huge, climate. It has a huge impacts on climate, livestock agriculture, massive. The water consumption, land consumption, everything. Now, if you're eating a cake, for example, that has less problems with it's less impactful on the environment. It tastes as good. The price point is around the same. Don't mind paying a little bit premium. It's a no-brainer. Most people don't want dead animals. They don't want to kill an animal, but they love chicken and they love steak. If you get the same tasting steak or chicken for around about the same price, but it doesn't avoid killing animals, you do it. It's a no-brainer. Same with cakes. You'd go as long as it tastes good, and like the price point is around about the same, a little bit of a premium maybe. I think it's a no-brainer. Absolutely.
Yeah, I mean, I think it's more to me, as a consumer. It's if you have a big family and friends gathering, let's say a wedding, all you're doing basically is you're more concerned about how people are going to think about the product when they taste it at the do, and you don't mind paying 50 quid, 100 quid. If it was a big wedding cake, you pay 200-300 quid, just almost like as insurance, because you're making sure it's absolutely sort of top notch. So
but before, if you look at going back years ago, if you had a cater for a big party, you probably have like one person that is say 50 who maybe is a vegan or vegetarian. These days, you probably get 10% of the people now saying we don't eat that. So you've got to cater for that because it's a bigger slice of the pie.
It's a lifestyle. Rather than actually a food intolerance, it's a lifestyle, isn't it? They basically want to save the environment for environment. Have
you done that? I mean, I've cut down massively on meat in the last 3-4 years, and I hardly eat any meat now. And
what have you been doing with your? Moving on. What have you been doing with your portfolio over there? You've been sort of like chopping and changing, getting bored with stocks, buying anything?
I haven't. I'm still holding the same stuff.
What do you own, by the way? What's your 6 core holdings? I know you mentioned it last time.
Let's have a look. I'll tell you the ones. Listen, I can't reveal some of them because I haven't revealed the club. But my
okay.
Core,
only the ones you.
I mentioned at the moment. My core ones are Polarian, GFIN, Escapant, TrueFin. There's my 4. And Escapant had finals out this week, which is quite funny because I saw someone on I think it was Stockopedia saying, "Oh, this company since IPO." I think you can't judge a company of like 3 years ago where they are now. It's like because I always said Escapant have always said we're not going to be EBITDA positive until we get to sort of 15, 16, 17 types, and that was always the case. So people investing at the IPO must have been aware they have to raise more money here, because they're not going to be generating cash. That's a basic, that's when I'm looking at researching small caps, I'll always look for that line in the sand where are they going to be profitable soon? Because I like that transition from them becoming loss making with the sentiments down a little bit because they've been burning cash for a while maybe, and all of a sudden there's a line in the sand, we're going to be sort of profitable next year. And that thing, it's a value inflection point. I quite like that. And that's happened with Escapant, happened with GFIN. And in fact, GFIN have news out today. Do you know, are you aware of Future? The media company.
Yeah, absolutely, massive.
GFIN, John Clark, when he came on the podcast, he took over from even the new CEO, and he said, I'm cutting costs. I'm going for higher margin business like media and stuff we own, and not so much just servicing other people with esports solutions that, margins are very thin. So I'll still do that, but be very choosy over it. And his model at the time was Future, and I didn't really know much about Future. And he said, have a look at the Future. That's the kind of model I want to go for, And in fact, they've just today, they've just taken on a non-exec director who used to be with Future, and they've also got two Apple executives, senior Apple executives on board as well with GFIN, and they're heading in the right direction. The margins went from like, if something like at the time the old board they had on there, the margins was something like 12%, and he's sitting up at 60% plus, gross margin there. So he's getting there. He said he's going to be profitable, and so he's getting there slowly. There's warrants.
Well, it just sounds as though you've got some rock star directors there from the corporate world. So you get that sort of brain power and networking effect.
Yeah, and they're not. They've taken options, and it's not a huge amount. You know, huge pays. It's quite like that. Escaping them, for example. I mean, there's always be careful. You always should read final results. But if you don't know a company and what they're doing, then the final results are out of date and they're irrelevant as a story. You can obviously look at, there's a lot of information in there, but you can't judge a company on its final results that were, first of all, were 6 months ago at least, and secondly, we're in a pandemic, and so escaping. Of course, they're not going to do well financially when all their sites are shut down for the majority of the year. But even so, the EBITDA loss went down from 1.7 to 1.4, helped by some COVID stuff. But also, like-for-like sales when they're open went up by 25%, and in fact, in the more mature stores, went up by 44% and 59% over certain timeframes. And they've expanded from 8 sites to 18 sites, and in fact 19 sites now during lockdown. So I think that is a mark of and also launched new products. That's a mark of a company that's pivoted very well. And I don't know any leisure company that's gone from expanding massively in a lockdown and also have 3.3 million cash. So I think they've done marvelously. And now they've
I know one. Nice. I know one. It's called CBOX. All I would say is actually they're not that dissimilar, because I think they'll both do really well. As international travel is not really good, opening up.
The thing about CBOX is
I think they'll both do really well.
Yeah, the thing about CBOX is luckily luckily they've got an online thing that can be shipped, and Escape didn't have that. During lockdown,
but they have now.
Nothing. Yeah, they had nothing but fizical sites, and so they had to pivot. And so
I think there's a lot of similarities, because it's non-discretionary. People want to enjoy themselves and prepared to pay a decent price.
They've got a franchise model as well, which is going to be.
Well, there you go. It's amazing, isn't it? Absolutely.
There's ambition there.
The other thing which is really hitting the tape at the moment is M&A, and we had KKR this week buying out infrastructure owner John Lang for about £2 billion. We also had a couple of weeks ago Blackstone, the other big sort of infrastructure VC, buying St Modwin, and that was agreed last week. And I only point that out because there's lots of other things like Proactis we talked about. With Immunodiagnostics was also taken out by another US company. But I own, as I mentioned before, the UK's largest private rental sector landlord called Granger. And I think they're right in the crosshairs as well, because their share price is roughly around about net assets. And frankly, they're seeing a lot of people now go back into the cities, young professionals, to actually go onto their buy-to-rent properties in places like Birmingham, Manchester, and London. And I could see just one of these big infrastructure, guys just knocking on the door and picking them up at not a massive premium, but sort of 30% premium. It'd make a perfect fit for them. Why not? You get the biggest landlord in one shot. It's effectively a trophy asset that you're never going to get again. So I would mention that one. And the other one, which I do also own, that I know investors have asked me to update them on, is Sage, and they came out with some pretty encouraging interim results about 2 weeks ago or a week ago or something like that. And what was really sort of caught my eye is that last year, 5 of those 6 months was pre-pandemic, and they had really strong numbers, and they still managed to beat it on a like-for-like basis. Organic sales are about 1%, but the effectively recurring revenues are at 4%, and most of it's actually recurring revenue. So they're really heading in the right direction, and their shares are ticking up nicely. They're sort of like roughly around about, I think they're around about £6.50 now. So they're moving up. They'll get bought out. I'm absolutely convinced they will. And the other thing, which is a good read across, we've talked about it before here, and I know investors have sort of flagged it and stuff, but small businesses are digitizing left, right, and center. And we've only just really sort of like, at the tip of the iceberg. They're seeing it, Sage. We've got Alico or AlicoSoft, as another one. That was when they reported they're seeing their clients digitize heavily now as people return to the office. And also Equals, they're another beneficiary of this whole digitization, online payments, and international Forex and stuff like that, because it's straight through processing at the touch of a button, makes it much easier. So, and that's really going to across the whole of the software space. If you're looking at a software provider that does back office systems rather than your Zooms and your Teams and those sort of like, teleworking type of stuff, then they're absolutely flying. So, I think those companies are going to do really well over the next 2 or 3 years as small, medium-sized businesses catch up with their bigger cousins by digitizing the whole of their businesses.
Let me ask you a question. How often do you check your share prices?
Well, it all depends on how busy I am, but I usually check them at least once a day.
Once a day? I don't check my once an hour at least.
Oh, okay. Well, it depends on whether what you're doing and whether you're bored.
I'm saying I wish I could do once a day. I did a survey just recently, how often you check your share prices, and I think, like I said, if you can get into the mind frame of you're buying a business, then like Buffett, he doesn't care about share prices to a certain extent. It's the value of the business and how much value that will generate. And I think shares are too liquid sometimes, and so people can trade them. You can check the share price all the time. And the thing is, sometimes you think about the share price, not the business. And I wish I could. It's too easy, isn't it? It's too easy to check your share prices. It's too easy to buy and sell shares, and that's the problem. Sometimes you forget there's a business there. You just look at the share price, and that's
a good discipline. Yeah, if you want to get into an owning business, is think what the value is of the business.
Yeah,
and that's where you need to work out the intrinsic worth. If you work out what the value is, then the shares are immaterial, how it moves on the day, etc. And that's the key bit. When you get news, has the value of that business moved up or has it moved down? And that's really sort of the sense check, because your daily movements of the share price, yes, if you're going to sell might be useful, or if you're going to buy might be useful, but most people are not buying and selling on a daily basis. They're holding, and therefore concentrate on the value of the business rather than the price, which obviously can go anywhere to a certain extent.
Yeah, well, I looked at a video recently. If you look at a company, you should look at 3 things there, essentially. And that's look at the valuation as is, the market's give it at the moment. Try and work out.
No, that's the price. That's the price.
I know. What I'm saying is try and work out the value of it,
Yes.
and then try and work out the value generation it's going to generate over the next 3-4 years. And that's where you should be. So, yeah, so what I'm saying is, is the price, yes, but what I'm saying is what is, I'm talking about, enterprise value, something like that. But look at that, and then try and determine if that's a good valuation, and see if you can work out how much generation value is going to do in the next few years. And then when you start doing that and looking at it as a business rather than just looking at the share price, you won't be swayed by, because when you start off, people who are under-researched, who don't know how to research, get scared out get worried out of a good investment just because the share price has gone down. Don't get worried out by something. If the business is improving, you shouldn't get worried, because what the price of the business is doing can be completely unrelated. Most of the time it is. I just step with the video. I know.
The key thing, the sort of like the trigger for investors, or the thing to really sort of like concentrate on with the price, is that, let's just say, for instance, you've got 100 million shares in a company, in company A, for instance. Typically, less than 100,000 or 200,000 of that 100 million of shares. So we're only talking sort of like, well less than 1%, perhaps less than 0.5%, trade each day. So what we're saying is that the ownership structure from day 1 to day 2 hasn't changed. And therefore, all you've changed is just a few small people in total game scale of things, buying and selling. It isn't what the business is worth and what people who own it long term believe it's worth. It's just a few shares going through the market. And that's the key. When it's that classic sort of, is that saying from Benjamin Graham, in the short term, the stock market is a voting machine. In the long term, i.e. such that it's driven by sentiment and price, or price is driven by sentiment.
Popularity.
In the long term, it's a weighing machine where it's driven by earnings.
Yeah.
So,
marvelous stuff. Anything else you want to chat about, Paul?
No, that's good. You got anything on the crosshairs at all to tell me in 2 weeks' time? You got on holiday soon?
Yeah, no, I've gone on holiday, yes, but I've got it. I have to research. Whenever I invest in a company, I want to do a video because it helps me. And I think sometimes, like I said, when you're looking at companies, by the way, how can you, I find this very intriguing. If you're looking at a company and researching a company, you really like it, because you've done this quite often and you've been quite enthusiastic about it. How do you stop yourself buying it? Because there must be companies you've seen there thinking, because that's a problem with in my share pickers investment club. I've told people, don't buy every opportunity out there, because there's plenty of opportunities. You've got to go in, bigger on the ones you have massive conviction on and convinced on, because it's like buses. One will come along every sort of 10 minutes. You can't keep putting a little bit of money here and there. So when you see a company that you think is a perler, and you think, wow, how do you stop yourself buying it? You just look at the one companies you
if
have.
If I think it's a high conviction play, I usually push the button, to be perfectly honest. If I have cash, unfortunately at the moment I'm fully loaded in stocks, so I haven't actually got much spare cash, so I do push the button. But I say I'm very selective. There's lots of stocks.
But you wouldn't, for example, put a 1% of your portfolio value in a company.
Oh no,
you'd have to be a big high conviction play.
No, exactly. And also, given I'm looking at a 5 to 10% of my portfolio, I jump into stocks or put into stocks. Then, frankly, anything which is not liquid enough, it just isn't going to happen. I just can't get that type of volume through. So, that's another limiter on it. But there's lots of stocks that I would like to buy at the moment, but I haven't got the money as like spare cash. But it'll come. If they get, I think there's a lot of them who could get taken out. The key is if you are impulsive, it's to recognize you are impulsive and to stop yourself buying 125 stocks, because you're never going to look after it, and your hit rate's going to go down, and you're never going to be able to really, move the dial. So that's the sort of key. And if you really want to sort of like something, go and have a cold bath, and that'll stop you.
You mentioned cold baths a lot. Do you do that a lot? I bet you go swimming in reservoirs. So, that's a similar thing. There we are. If you're going to buy, if you're an impulsive buyer, just go for a swim with Paul in the reservoir, and that'll sort you out. By the way, if you're a fan of video, which I know you're, Paul, I'm doing a weekend podcast I normally do with a few mates. They're coming down. First time ever we've met for probably over a year. We've got together, and so we used to do them sort of once a quarter. Used to come down to my house. We used to film a weekend podcast live. So we're doing that now tomorrow, which is quite nice. They're coming down. We're all getting together in the summer house. Luckily, the guys who I'm with, like Steve, is into it's his job, is video and audio, so we can do a good production job on it. And so we're doing that tomorrow. And in fact, it's a cracking debate. I've got a question for tomorrow. I know people will get into. But I'm not going to say it now, but it's something I know investors will be passionate about. But if you got a few spare minutes, Paul, get involved, fella.
I will do, yeah. Look forward to it.
All right. Speak next week, fella.
Cheers, Justin. Have a great weekend.
Yeah, cheers, buddy. Bye-bye.
Bye.